All right, so thank you everyone for coming to our February Farm Bill series. We're going to be talking about the credit and crop insurance titles in the Farm Bill. And yeah, I'm really excited to learn more. We have Jalen Cates from CFSA and David Beck from Self-Help Credit Union, who both know so much about this. And the coalition has talked a lot about conservation and nutrition. And I think this is just kind of a cool side of it that we haven't learned about yet. So I'm gonna pass it over to Jalen.
Thank you so much, Brett. And thank you all for being here. It looks like a mostly North Carolina crew joining us, but welcome. Welcome if you're from out of state. We're so happy that y'all are here to learn about the Farm Bill with us. And you get a bonus. You thought you were just coming for credit title, and boom, you get hit with crop insurance too. You didn't know you were getting a double whammy today. So we're gonna squeeze in a little bit of information on crop insurance before I hand it over to David to concentrate mostly on the credit title. But we are going to share a little bit about what this coalition, the North Carolina Food System Advocacy Coalition, is concentrating our efforts on for 2023 Farm Bill reauthorization. So what is crop insurance? What is Title 11? Crop insurance title provides subsidies to farmers and subsidies also to the private insurance companies that provide those crop insurance plans to farmers. And crop insurance typically comes in two forms: yield insurance and revenue insurance. And yield-based insurance policies provide payments when crop yields drop below an insured amount, as long as that reason for the low yield is an insured cause of loss, like drought, natural disaster, too much rain, pests. Those are the type of things that might impact how much your yields are as a farmer, and then you are insured against that. Revenue insurance is similar, but it insures against drops in the price of your crop as well as the yield. So you could be thinking you're going to make a certain amount when you plant, prices could drop. Revenue insurance protects you against that loss in revenue. And so most policies today are sold as revenue policies, and traditional crop-based policies insure individual crops, including some organic crops, but are not available for every crop in every county across the country. So if you can go to the next slide, please. So, and click again to the stuff, because I don't know why that's on. One more time, please, Brett. And maybe one more time. So this has traditionally been an issue for farmers, insuring every single crop separately, as was the setup until the 2014 Farm Bill. This was an issue that folks brought to USDA as a needed change. And so in 2014 Farm Bill, the USDA authorized, the 2014 Farm Bill authorized USDA to develop a new whole farm revenue protection policy. And this was huge because it helps farms that are growing a bunch of different crops. So you're growing 25 vegetable crops and you're trying to insure all those individually. What a nightmare. This creates a situation where you can insure multiple crops together, and it creates opportunities for more organic, sustainable livestock insurance for your crops as well. So whole farm revenue protection came out in 2014 and was updated the past Farm Bill a little bit, but not too much. The last Farm Bill, it basically allowed hemp to fall under whole farm revenue protection and made some other tweaks. But we, as this coalition, several members of this coalition are also members of the National Sustainable Agriculture Coalition, and have been working with them. And NCFSAC has developed a list of crop insurance recommendations for the 2023 Farm Bill. And if you can go to the next slide, we would like to show some recommendations that we will also be advocating for in our work over this next year as the coalition. So these are very specific asks to USDA through Farm Bill authorization. asking the risk management agency, which is the authorizing agency that deals with crop insurance, and those companies that they pay to handle crop insurance. It would direct the risk management agency to define beginning farmers and ranchers as those that's farming for less than 10 years rather than just 5 years, which is done by all other USDA agencies. It would expand those insurance options for diverse and organic farms, kind of streamlining that product to just better serve diversified organic farms. And then it would provide continued education to insurance agents about WFRP and agronomic practices. And we're asking for another $5 million in their education partnership program. And I can't reiterate how important that education piece is. Because this is a newer crop insurance tool, a lot of insurance agents don't know about it. It's more complicated. It's more paperwork. You kind of got to know your farmer a bit better when you're talking about a whole bunch of different crops. It's a little more complicated than just one crop. So there has been an express need to USDA for continued education, both for crop insurance agents and for the general public, so the farming public, so they know about this tool and how they can use it and what questions to ask of their agent, so they make sure they're getting the plan that's right for them. So those are our asks. As a very quick intro to crop insurance and the type of crop insurance that we feel like is very supportive to small diversified farms, and we're going to be asking our North Carolina delegation to support these things, and we encourage you all to join us in that ask. So I think we're gonna have time for questions at the end, and I'll hand it over to David Beck.
Thanks, Jared. Jalen, sorry. Living in the past there for a minute. So Title V is credit, and thank you for that great slide, because I didn't have a fancy slide for the title the way Jalen did. But Title V it includes the Farm Service Agency, which is part of USDA, which guarantees loans through USDA and also makes direct loans. They're known as the lender of last resort. And then also includes the Farm Credit System, which is an independent agency that is not part of USDA. It's a government-sponsored enterprise created by Congress in 1916, and they today control 44% of all ag lending. Farm Service, the Farm Service Agency does, I think, about 20% direct, and the rest is commercial banks. So your B of A's, Wells Fargo's, and that sort of thing, and other local community banks. And just real quick, to the interplay between crop insurance and crop insurance and lending is incredibly strong. I mean, one of the reasons that so many loans and get made to the big row crop entities is because of their crop insurance advantage. That's the guarantee that lenders get, and why they're willing to make all those loans, and why it's so important for whole farm revenue protection and other sorts of crop insurance. To one of the reasons why it's so important is to help get loans to those folks, because, and as lenders recognize that those crops are guaranteed as well. But what I really want to focus on is the Farm Credit System, AGS GSE. So I don't know if you want to go to the next slide. So Farm Credit, as I said, created in 1916 to provide reliable credit, now makes 44% of all ag loans. They have a cumulative annual profit of $7 billion. And so self-help comes at this from the angle of, or the experience of being a home mortgage lender. In that role, we work very closely with the housing government-sponsored enterprises, Fannie Mae, Freddie Mac, and the Federal Home Loan Banks and Congress. So those are all creatures of Congress as well, and they are required to grant back money to support affordable housing. And we use that for, in the case of the Federal Home Loan Banks, their affordable housing program grants provide down payment assistance to the tune of $7,500 or $10,000 for lower income home buyers to buy homes. And so when we learned, as we got deeper into the ag and food space and learned that agriculture has its own highly profitable government-sponsored enterprise. We were like, well, how come the housing GSEs have to grant back money and Ag's GSE doesn't have to grant back any money, given how much money they're making? So they
get the car done.
so
If you're not on, if you're, can y'all please maybe mute so we can hear? That'd be wonderful. Thank y'all so much.
so at any rate, a 10% grant requirement.
You see the boots I brought? What's this thing?
Rosa, I'm gonna have to call you out. Rosa, can you please mute, or Beck, can you mute Rosa, please?
I'm so sorry.
So
No worries.
so at any rate, the 10% grant requirement, which is what the federal home loan banks are required to grant back, would amount to $700 million annually, given their current profitability, which has only been growing over the years, to support grants, to help farmers, small farmers buy land, to help heirs property folks sort out. And so it's potentially big systemic change that would really pull the government-sponsored lender that does 44% of all ag lending currently into the spaces where we work in a much more impactful way. So next slide. So here's a little, this is just a map of what farm credit looks like. Every area, territory in the country is covered by a credit association or a lending credit association. So since we're in North Carolina, you look there, we've got Carolina Ag Credit, which covers the western part of the state, and Ag Carolina, which covers the eastern part. Ag Carolina in the last year or so has merged with what used to be Cape Fear Farm Credit. And then actually Carolina Farm Credit has a merger ongoing with Ag South, which covers most of South Carolina and some of Georgia. So that's another trend that's really going on, is these farm credit associations, which used to number in the hundreds, are merging together, getting stronger, and just becoming less in number. I think we're down to 60 now. If you look, there are also 4 districts. So each association feeds up into one of 4 local district banks. So in North Carolina, it's the Ag First district. The Ag First Farm Credit Bank is located in Columbia, South Carolina. Texas has its own little system, and their banks in, I think I'm not sure where it is, maybe Dallas. Agribank is in Minnesota, and then CoBank district is out of Colorado. Next. So who owns farm credit? Farm credit are cooperatives, so they're member-owned cooperatives, and the only people eligible to join the cooperatives are people who borrow from farm credit, i.e. qualify to borrow. So and their total membership nationwide is 500,000 farmers, ranchers, ag producers, et cetera. And that's roughly, I think, a quarter of all farmers in US. So the stat I saw said there are 2 million farmers across the country. And so they have 25% of that, but do 44% of the loans. And one of the big problems to me, so if you think about it in terms, if you're a member of a local food co-op or REI or whatever, everyone gets if the co-op has a good year, everyone gets some money back, right? But also everyone is eligible to join REI or your food co-op. Farm credit associations, you are only eligible to join if you qualify as a borrower. And so it's not a very fair, when you consider the fact that they're government-sponsored enterprise, the only people they are helping are a pretty exclusive bunch of farmers who, frankly, they think don't have any credit problems. So I think that's a little problematic. But to next slide. Or next part. So why is farm credit so profitable? one of the main reasons is that they, as a government-sponsored enterprise or GSE, they have big competitive advantages. And one is that just because of their GSE, there's an assumption or implicit guarantee that if Farm Credit were to fail financially, the federal government would bail them out. And so if you're on Wall Street thinking about what securities to buy, you're going to give a better, you're going to be willing to pay more for a Farm Credit bond than maybe another bond, because the likelihood of Farm Credit failing is lower because of the implicit government guarantee. And then also Farm Credit is exempt from many state and local taxes. Commercial banks have estimated those advantages well over $1 billion a year. So that's that's part of the reason they're so profitable. Other, just in general, given the, as we discussed, given the benefits of that USDA provides in their overall guarantees to ag lenders, most ag lenders make a good amount of money because the loans are guaranteed to most part. So some FAQs. How does Farm Credit currently use all their profit that they make? So roughly half of their profits are kept as what are called retained earnings, and those churn back into the organization to help them grow and do more lending. And we certainly do that at Self-Help. All lenders do. Most organizations try and retain some of their earnings so they can increase their mission in future years. The other half is returned to Farm Credit member borrowers as what they call patronage. So that's like what I was discussing about if you're at REI or your food co-op, you get, you as a member, you get some of your profits back. So Carolina Farm Credit paid out $32 million of its $59 million in profits and patronage in 2021, which, and that's Farm Credit's #1 line of argument against a grant program, is that it would hurt the very people we're trying to help because it would reduce patronage to their farmer member owners. I think that actually it brings in a lot of things into question, such as who qualifies and who receives Farm Credit loans. Why is that patronage amount so high? And, you know, one of the things it does is build a lot of support amongst those 500,000 farmer members, because they like getting all that patronage back each year. And sort of answer that one a little bit, but won't a grant program hurt their members and their system? You know, I honestly think no. I think it may reduce patronage some small amount, but the I think one of the things that we've learned from the Federal Home Loan Bank grant program is that it's actually grown their economic pie a lot for members. And so it may reduce the overall amount of percent of patronage, but it may increase the overall amount. And I think we see that we're members of the Federal Home Loan Bank as a credit union, and every time we are able to use down payment assistance to help do a home loan, we get to do a home loan. So that $7,500 that essentially comes out of what would be more of our patronage from the Federal Home Loan Bank helps us make another loan. So Farm Credit FAQs. So how could the grant be used to help organizations like yours? Possible use of grant funds include farmland purchase down payment for young, beginning, small, and socially disadvantaged farmers and ranchers.
Okay. It was, and that's actually a lot of the problem with the youth now, is there's really nothing for them now.
Sorry.
Supporting local food system initiatives, food hub, farmers markets, subsidized loans for food system entrepreneurs, helping heirs property owners gain clear title, help food bank source from local farmers, support local food and ag driven rural economic development. There are any numbers of possible uses, and I'm glad to hear any ideas folks have about more potential uses. I think a lot of that would be decided in regulation, but with probably some key outlines. The way the Federal Home Loan Bank one works is it's required that a third of them go to down payment assistance for first-time home buyers. So it could be a requirement that X% of grant funding is for down payment, farmland purchase down payment assistance for YBS, SDFR, farmers and ranchers, and then the rest is decided based upon community needs, and altered and flexible from year to year, perhaps. How might a farm credit program affect North Carolina? So as I mentioned, there's 2 farm credit associations now in North Carolina: Ag Carolina serving the East, and Carolina Farm Credit. Those 2 in the last year that annual reports have come out in 2021, Ag Carolina had $72 million in annual profits. So 10% of that would be $7.2 million in potential grant funding. Carolina Farm Credit had $59 million in net income. 10% of that, the number's wrong there, would be $5.9 million in grant funding. So, and some folks may compare, know that Carolina Farm Credit has this annual grant program where they do 20 grants at $5,000 each. So they put out $100,000. So compare that to $7.2 million in grant funding. So it's that, and this is annual money. So there may be, that's a lot of funding, and you can think of various ways that could be used. Some of it could be split to a national pool to cover national needs or what have you, but that's really potentially a game changer. Will Congress include this in the next farm bill? Why? Hopefully, this grant program, the original concept, Senator Brown of Ohio drafted an amendment like this, part of the 2012 Farm Bill, which got shot down. But then it was also included in Elizabeth Warren's presidential campaign, is supported by the American Bankers Association's Reform Farm Credit, and is one of NCFSAC's 2023 farm bills. The obvious challenge is that Farm Credit has been lobbying Congress for over 100 years and has 500,000 members. So, and they are, and I'm not going to say they're a bad guy. They're viewed as a good guy, but they've done a great job pretty much staying under the radar and avoiding controversy and that sort of thing. So there's a bit of a, if it ain't broke, why fix it element to things. And I think, one of the things we know when with the amount of discussion about how do we just get more equity into sustainable ag and equitable food system spaces, it's like, well, one way you could do it is for Ag's GSE to be required to grant back 10% of their profits, and given the amount of subsidy they effectively get from the government for their GSE status. What can we do? Work with our North Carolina representatives on the Ag Committee. We have 3 who, Representative Adams, who's already working on this, Representative Davis, who we talked about it earlier this week, and Representative Rouser. And all 3 are not only on the Ag Committee, they're on the Credit Subcommittee. And so helping continue to educate, advocate, and with them, I think is critical. Obvious, maybe not obviously, but this certainly has more appeal with more, I think, more liberal members of Congress than more conservative members of Congress. So I think that's a bridge we have to work to cross. And that also applies with our US senators to help them understand the benefits of a grant program like this and help them consider championing it. And I think we also need to collect local stories that people have about farm credit or what people know about farm credit. As I said, they've done a really great job. Most people, if you ask them what farm credit is, they'll say, oh, that's part of USDA. And people even in this field know little to nothing about farm credit. So the more that people do know something and can share what they know, that's really valuable information. Okay, some additional information. Self-help's Sustainable Food System webpage includes a list of publication of interest, including a one-pager on creating a farm credit grant program. The American Bankers Association has a regular Farm Credit Watch publication and also funds the Reform Farm Credit webpage I mentioned. And I am glad to be a resource to anyone, to answer questions, entertain ideas, and that sort of thing. I am glad to assist folks. And so now I don't know if we want to go to questions. I see there are a few in the chat. We can, Brett, thank you so much for steering the ship here.
Well, real quick, David, we want to mention before we go to questions, there's an opportunity coming up here in a couple weeks to advocate for these issues as well as other Farm Bill issues. The Farmers for Climate Action and Rally for Resilience is happening on March 7th in DC on the Mall, and several organizations that are partnered with our coalition. I think a few members of the coalition will be attending that. And the main focus of that rally is around asking for Agricultural Resiliency Act co-sponsorship. It is geared around climate, but all these other asks are very important. So if you are going to DC and want some talking points, please reach out to Brett and we can hand over a document that kind of highlights all the issues that we're tracking at the coalition. But yeah, let's hand it over. Questions. I see some in the chat, David. Maybe we go there first.
Yeah. So Kelly asked, you mentioned these farm credit mergers were stronger. So I think I generally agree. I think corporate community mergers are not good for consumers. I think what I meant was they're making the organization stronger. So instead of or bigger, maybe is a better word. Instead of having a bunch of small local farm credits, we're going to end up with 20 across the country is my guess. And I don't think that's a particularly good thing. I think it's a loss of local control, but I think it does support the argument that they need to be granting back more money because I think it's going to increase their profitability. And I think it is one of the reasons. I mean, when I started working on this 5 years ago, I think their annual profits were 5.9 billion. Now they're at 7, and I'm sure it'll be over 7 when the final 2022 numbers come out. And I think part of that is due to consolidation. And I don't know if you want to.
Yeah, Keith, I'm a little unsure of your question. I mean, so whole farm revenue insurance it already exists. It is authorized through the Farm Bill. And the asks that we are making are improvements to that program. But yeah, Keith, what do you need clarity on?
Where I read was something about replacing all forms of farm insurance into that one package. Is that part of the conversation or is that misinformation?
No, so I'm going to clarify that I am not a crop insurance expert. I'm trying to get there, but that's not my understanding of what the ask is, at least from NCFSAC, or there would be political will to do. I don't know, David, do you have any other insights there?
I think I'm not sure. I think if it was being repackaged, it's just as a way to make it more efficient in terms of getting it strengthened in the Farm Bill. I mean, I feel really good about where things are going in terms of credit insurance and the or crop insurance in the Farm Bill. I think Senator Stabenow has really listened to NCFSAC over the last couple of Farm Bills on that, and I'm very optimistic it is going to be strengthened personally. And also, if folks remember Scott Marlowe, this isn't Farm Bill because he's at USDA, but that is what he is doing a lot of work on now at USDA. So it's he's previously at RAFI USA for folks who don't know, but he's really focused in on crop insurance and particularly disaster related crop insurance, which is so critical for small farmers as well. I mean, given the amount of natural disasters that everyone's facing nowadays.
I know there are some, I think, Keith, there are other conversations happening about that streamlining, making it more affordable and efficient. And, every year there are pressures on crop insurance and how crop insurance subsidies are being spent too. So it's always a big conversation every farm bill cycle about these packages. We specifically are focusing on whole farm revenue protection because it's the one tool that really supports diversified farms, which is small diversified farms, which is a focus of this coalition.
Rosa, I see your question. Is there time to expand on how farm credit serves a select group of people? So yeah, it's sort of a point that has hit my consciousness that as I've worked on this issue for a while. It's like if you're a farmer, let's say you are a small Black farmer and you go to your local farm credit branch in whatever county you may happen to live in, and they don't qualify you for a loan, either just based on wholly legitimate inability to meet their credit standards or less legitimate reasons, then you cannot join your local farm credit because you are not a borrower. And that means that a lot of benefits to being a farm credit borrower, including whatever technical assistance they may provide or other advantages, and that patronage that you get back as part of your how much you borrowed, you're not eligible for any of that. And so I've come to the further belief that one of the things that should probably change about current farm credit, in addition to a grant program, is some way to expand membership qualifications so that they are serving or at least have the ability to serve all farmers. And that doesn't mean all farmers need or should be getting loans, but Ags GSE shouldn't be an exclusive club of the best qualified borrowers. And I think that's one of the arguments the bankers make, is that that farm credit is able to cherry pick the loans because they can offer better rates because their cost of credit is lower as a government sponsored enterprise. And that is just, I think, factually true. The bank's main advantage is that they are depositories. So if you borrow from a bank, you can also do your checking account, your cash flow with them and everything else. But they really have a very difficult time competing on rate with farm credit. I have not, I've talked with Booker's office about this, and one of the things I think that one of the ideas in his Justice for Black Farmers Act is a Black Farmers Bank, and it's sort of similar to the National Co-op Bank. And so, one of the possible use of funds would be helping capitalize a Black Farmers Bank, if that were to come about. He hasn't, and I've presented the idea around farm credit to him, and it hasn't been, he has not incorporated it in, which I think if it came to, is it going to be in the farm bill or not, he would certainly be supportive. I think in some ways that's not the worst thing in the world, because I think to get done, it probably needs a Senate cadre that's viewed as more mainstream than Senator Booker on ag issues, but then has solid pushing, and we won't vote for this bill if it's not in it from the more liberal members like Senator Booker. The other one I've not talked to yet is Senator Warnock. I think he would certainly be a potential great champion of this. But really what we need most right now is a Republican co-sponsor with Senator Brown, which is one reason that Senator Tillis could be really important. I think it's a long shot that he would want to step out that far, but I think it's incumbent on us to present the case to him.
David, I see we have some South Carolina friends on here, or at least we did earlier. Do you have any read on Tim Scott or support from South Carolina folks that could help?
Yeah, that was another So actually, with your colleague Matt Neese, when we were at the NCFSAC conference, we visited with Senator Scott's staff, and it was actually picture day. We got a picture with Senator Scott himself, and I think he is another possibility. If again, somewhat of a long shot, but if there's rumors of him thinking about running for president, is this a sort of issue, sort of populist issue that might somehow appeal to on his campaign and sort of outweigh some of the moneyed interests who would be opposed. And then we also met with Representative Clyburn's staff who are very interested as well. And certainly we would need support from folks like his office to get this done. Let's see. Any other questions? Does anybody on the call have any experience with farm credit? So that to me is reflective of how good a job they have done of like not engaging in this space where they should totally be engaged. I mean, can you imagine if Ags GSE were really out here supporting the work we're doing the way, for instance, Fannie Mae supports home ownership in this country. Most people in the housing world certainly know who Fannie Mae is and know a fair amount about them, but Farm Credit has just managed to stay out of the sustainable ag equitable food system space, and while making a bunch of money. And it's a bit, one of the analogies someone presented which resonates with me, is it's a bit like the rural electric co-ops in that they have, they sort of did their job in getting rural America electrified, and they've been they've sat there and done that for a long time, and they've frankly probably had the resources to do a ton more if they had been assertive about it, but they like their sort of current situation and don't feel in the need to push it. I think Farm Credit is in a similar situation. Yeah, Farm Credit does some annual reporting, Renee. The Farm Credit Farm Credit Administration is their regulator. But it's very vague, and one of the issues that's come up is Farm Credit under the Equal Credit Reporting Act, business lenders are not allowed to collect demographic information, borrower information. So whether a borrower is a borrower's race or ethnicity and that sort of thing, they're not allowed to collect it. The Dodd-Frank Act included a provision that allows the Consumer Financial Protection Bureau to promulgate regulations requiring business lenders to report their loan demographics. So that is probably going to pass out of or get promulgated this year from CFPB. The biggest opponent or the most vocal opponent to that regulation, the CFPB 1071 regulation, is the Farm Credit System. And they claim in their comment letters that they are opposed because they don't want to be under the jurisdiction of CFPB. They're not their regulator, blah, blah, blah. I think the much more likely reason is that reporting race and ethnicity is going to expose the fact that the vast majority of their loans go to white farmers. And part of that is natural because most farmers in the country are white, but I think even adjusting for that, it will be shocking. And one of the things that we realized is that they actually do home lending as well. Farm Credit is allowed to make home loans to anyone who lives in a community of less than 2,500 people. And so they already report under the Home Mortgage Disclosure Act, their mortgage lending. And so we have done some initial looking at that, and it's not a huge bulk of Farm Credit's loan activities nationwide. They probably did 20,000 home loans last couple of years, but the amount to which it is to white borrowers is astounding. Just simply astounding, like in the 95 percentile range. So that's something we hope to be able to share out as we get it a bit more. But that, I think, to me explains why they are so opposed to the CFPB 1071 rule, because it's gonna beg questions about who is qualifying, who's getting loans from AGS GSE.
I have a question that might be, yeah, everyone might know the answer except me, but how does someone qualify for these grants? Like, do you need a farm number? How would someone even begin to?
Right. So Senator Brown's one-page amendment as part of the 2012 Farm Bill had set it up as each Farm Credit Association would create a community advisory panel to solicit grant applications and then decide who gets the grants. And I think it would need to be probably a bit more sophisticated than that. I think it would probably, if as this were to move to actual law, there would be some guardrails set up to make sure it's not just feeding back to the same farmers who are already benefiting from farm credit, but also some flexibility in regulation to meet more pressing needs year to year. So I think some part of it, like if you were going to buy farmland, yes, you probably have to have a farm number to buy farmland, one can envision. But if you were a nonprofit who works in the local ag and food space, then you would not necessarily need to buy to have a farm number. You could just be qualify under general nonprofit status and that sort of thing. But I think a lot of those details are TBD and something to spend more time thinking about. My somewhat flawed view has been this is a fire hose amount of money, and it will do good things, and it's for people smarter than me to figure out what those good things are. But I've realized that people want to know what those good things could be, and there needs to be more thinking around that.
Right. I'm just thinking, like, if someone is a beginner farmer and there was a grant through Farm Credit to support them,
Mm-hmm.
like you said, they'd have to know about it.
Right. And I think right. So there would have to be huge awareness raised. And I think one of the nice things too is that it wouldn't be nearly as cumbersome regulatorily as a lot of the USDA stuff. You know, I mean, it's just so hard to figure out the USDA stuff. This could be a pretty simple grant application. And, you know, depending on demand, it could be, you know, everyone who applies is funded. It's a pie that's cut up by everyone who applies, you know, or that sort of thing. So I think that is a real positive about it as well. No, Farm Credit is not under CRA regs, and neither are credit unions for that matter. But the which I'm not saying is a good thing, but it's a fact. And yes, Farm Credit again doesn't even really report who their loans go to. And some people have equated to this. Billy Hackett, who's sort of heads this issue up at NCFSAC, often talks about this grant program as sort of amounting to community reinvestment, which I think is a good way to think about it. It also scares me a little bit on Capitol Hill because community reinvestment is a bit of a lightning rod with some people. But I think that it is a fair comparison in some ways.
Great. Any other questions? Crop insurance, farm credit, farm money related things.
I have to commend this group because we have had almost a group of 30 people for almost a full hour wanting to learn about crop insurance and credit and get into the weeds. And I just have to say how much I appreciate you, David, for having so much experience with this and for sharing with all of us, and for you all for sticking out and wanting to learn, because we're all learning together, and we'll be doing it again after this farm bill, because there'll be another one 5 years after that. So we'll be lifelong pals, y'all. But thank you all so much for being here, and thank you, David.
Yeah, no, and Jalen, thank you, and Brett, thank you for organizing this and creating this forum. And yeah, I mean, these are, big policy changes are long-term things, usually. And I was thinking about it I think, when I drive into work, I think about these things, and sometimes the idea has to be generated enough. And then when it gets enacted, is there some sort of emergency? That's how the Federal Home Loan Bank grant set aside program was enacted in the S&L crisis in the 80s. They were like, wait a minute, if we're going to bail you out, we're going to require you to give a bunch of grant money back to support affordable housing. So, I am very hopeful of getting it included in this farm bill, but if it doesn't, then it's building momentum to when it does get included, because it's an idea that should happen. I mean, it should be a thing.
Rosa,
Rosa.
your hands up.
Yeah, thanks. I just wanted to ask if, I think these are great things to have. There's going to be more, right?
Of these sessions?
Yes?
Yes, monthly.
All year long, girl.
Okay. I just wanted to make sure. I was like, we need to do this every month, because part of when we first started, part of what we talked about was how we need to get information to our own, we need to build our own capacity. So, I wanted to just ask about, is it all on the farm bill? Yes, that would be great. But their issue with the census, the ag census, I don't know how folks are feeling and knowing about this, but there is the potential for really bad undercounts of farmers, especially small farmers. And there doesn't seem to be, it's very tricky about how do you actually fill out a census form, and you have to have the number, and if you don't have the number, and there's some exceptions, and it's very tricky. It's like this whole club thing. They're just basically set up to count who they already know as farmers, but they're not counting us, basically. So I just wanted to put that in there.
This series is Farm Bill centered, but I'm going to plug the coalition here, because we can always have these separate from this fourth Thursday Farm Bill series. We can have more sessions, and also our whole coalition meetings are the second Friday of each month at 1, and we often do education during those. So this is a plug. If you're not in the coalition, drop your email in the chat or reach out to us. I'll put that email in, and get on our listserv to learn more.
And I think, Rosa, your point is very important. I mean, the ag census feeds in all the numbers that USDA programs are then anticipating for need around the country in different areas of their work. So it is incredibly important. And I think it would be great if the coalition, if we could learn more about it, and if we could share information with all coalition members so we can get information out to any farmers we're connected with. It's a huge issue. So thanks for bringing it up, Rosa.